Hello everyone, welcome back to Financial Options with Thumper. Today we're doing my weekly review, and this week I did a couple of different trades. I'm going to talk about a wish play I did where I sold an in-the-money covered call, and I'm going to talk about a Palantir Wheel I've been running and tell you guys how that resulted. And first off, here are the daily snapshots at close. Pretty flat, a little positive, but nothing too crazy went on this week in my portfolio in that regard. The yearly progress report here, I'm up $4,417 in the account. I did have a deposit hit this week of about $3,000, so that's why that number's a little inflated compared to what you just saw there. What's kind of interesting is the June premium for realized is already over $10,000, which I tell you, every month it blows my mind. When we're in May, I was worried that June was going to have small returns because I was sacrificing some plays from June to, I was closing out in May, so I didn't have much stuff cooking for June, and here we are about halfway through June, and I mean, another 10K in realized premium. It still surprises me sometimes. This week's trades, a lot of trades went on. I did a couple of different things here, so this might take a little bit of time to get through. On Monday, I decided to open up a play on a new strategy that's becoming a little hot topic in our Discord called the Colony strategy. The short version is you're selling premium on stocks that have a low price point that you think will stay in a small price range, and hopefully you can get your cost basis down to zero quickly. I did that on ITP. The way I'm seeing this is I'm putting 5K into this position. Worst case scenario, I lose 5K and I learned a lesson. If it works, then I establish a colony and maybe I put that 5K to go and establish another one. And it's just kind of neat because if you look at this, when I sold the 0.5 puts on it, got like a 20% return here because collected 10 cents on a 50-cent stock. So that's kind of neat. As long as ITP stays around 50 cents, that's why this would work, I guess. If you want to learn more about that, join the Discord. There's some people that came up with the strategy, like they're in there, and you can ask them questions. Another thing I did on Monday is I bought 1,000 shares of Wish and sold an in-the-money call against them. I'll get back into this a little bit later in this video. I sold a Cat 185 put, collected $130 on that one. That was a Cloud Ninja special. Another thing I did is I sold some covered calls on Wish. I do have 500 shares of Wish, so these were covered calls. And then I also closed out my Netflix play that I put on the previous Friday, I think it was. It was up quite a bit, and just decided to take that profit. Tuesday, I did no trades. Wednesday, I chose to close out my June 18th Wish 15 put. It was sitting, pretty good price here. Made a lot of money off of that play. Remember, this is part of a roll position, so I'll have to look at seeing where I'm at in that position since I just rolled it again. And below it, you can see what I rolled to. I rolled it out a month, collected another $1.24 on top of that. I think my break even to get out of this trade would be if I could buy this back at 250-ish. And I'll look at that later to figure out before I actually make that kind of trade. But this is just something that shows you can keep rolling stuff potentially indefinitely if you have the money to do it. And that's what I'm doing with this position. I think eventually Wish will be above $15, and this contract will eventually finish out of the money, and I'll collect the whole premium. But for now, I'm just rolling it for small credits until that happens. So that's what's going on with this little Wish position. Wednesday, Netflix dipped back down to like 487. The premium kind of shot up. Volatility was up a little bit. So I decided to sell 2 contracts on Netflix. I staggered the expiration dates. The closer expiration I played at 465. The one that's further out, which is actually beyond earnings, so the plan was to close this before earnings. I went a little safer at the 440. Collected some nice premium for that. And then I actually closed that 22.5 call that I sold on Monday because it hit a nice profit part, so I uncapped those Wish sales, or I uncapped those Wish shares so they can run again if Wish goes up. And collected a little $300 on a 2-day trade, so that was pretty nice. On Thursday, I sold a couple of contracts on T at the 27.50 mark. I wouldn't mind buying T at 27.50, and I'm getting paid $42 per contract to buy it at that point if it gets down to that level. So that was nice. Those two Netflix plays that I put on Monday, or actually, was that Monday or Tuesday? Tuesday. So this is a 1-day hold. I closed both those Netflix plays because one of them was at 30% and one was at 20% after 1 day. So I'm just gonna take that money and run. That's a beautiful thing about options is you can declare yourself a winner at any time that you're in the profit. And that's what I did here. 1-day hold, $266 between the two positions. Also kind of neat that they both came out to the exact same profit. That was not intended in any means. So that was kind of neat. I saw some puts on Palantir because I think my wheel position was going to expire in the money, being a cash position again. So I sold this one a little early. And come next week, I'll sell another 5 contracts to get back to the 10 contract position that I've been doing. I again sold another covered call, my 500 shares on Wish because premium went back up. Wish went up to, I think, a little bit above $12. So I was able to get a little nice premium there. And then I got back to some of my stable stocks that I normally play. I sold some contracts on Coke at 52. I like it at that level. O at 65. I prefer to be at the 60 range for O, but 65 would still be a discount on where I think they'd actually be valued at. So I put a little money on that finally. And AMD. This might actually be the second time I'm playing on AMD. I thought this was a safe strike given the current market conditions. And then I opened up a call spread on Zoom. So I sold the 400, bought the 430 for protection for a net credit of $555. So I got paid $550 to open this position. And I just don't think Zoom's going to hit 400. But in the event that I'm wrong and it just shoots through 400 and keeps going up, my max loss on this position is 3,000 because the 430 caps it because it's a spread. And then what's also funny is, I think my last video, I complained how Interactive Brokers takes about a week for my cash to hit the account. Well, Friday, or actually today, I put in a deposit and it hit the account like 3 hours later. So that account, that credit happened within the same day. So, I trashed them a little bit on that and they fix it. How funny is that? Looking at this, that totals up to almost $3,000 in realized profits. But I also mentioned I had a wheel that expired today in the money. Had some Palantir 24 calls that expired. And from those calls, I received $432. But that means I have to sell the shares at $24. I was assigned at $23.50, so I'm selling shares I bought at $23.50 at $24. So I'm getting $500 in capital gains from the stock. I'm selling it from $23.50, selling at $24. And then I also have some Wish 7.5 puts that expired today. I usually close out most of my trades, but these ones I just let them go because obviously the covered call, I want the shares to go away eventually. When you add all this up, you can see my realized total is actually $4,333 for the week. And then I opened up about $6,000 in premium that's going to be cooking going into the future this week. Here's a quick overview of my current positions. Alright, and here's what my current portfolio looks like. Seeing a lot of red, but overall it's positive if you combine everything. Not really much to point out here. I guess I have a Beyond put that is getting in that borderline. Maybe I should close it down. It's at 70%. Same thing with this Clorox 185 short call on the PMCC. It's sitting at 80%. I probably should close that out, except looks like the spread is pretty big, so you might not be able to get 30 or 35 cents to close it. You might have to go up to 80 cents, in which case I'd rather just leave it open. KMB, similar PMCC, the short is making money while the long is losing money. I still got the Rocket Leaps. I never closed those, and right now they're sitting uncapped still. And then here's all that Wish stuff that's going on. Moving forward, I did say I made like a different play for myself in Wish. I bought 1,000 shares of Wish at 10.05, and then immediately turned around and sold the 750 call against it. So it's a covered call that's in the money. What I'm seeing here is the premium was really high. So I guess my ideal scenario is that Wish stays above 750 and the shares get called away. And the result of this trade would be that I made $400. If for some reason Wish goes down below 750, then I'm still in profit until I get down to $7.12. And if I'm buying Wish at 712, I think that's a huge discount. So instead of buying it at 10, my cost basis would be 712. Like that seems like a win-win scenario. So in this case, I feel like I just sold time saying in a month from now, just give me $400 and I'm done. I don't really care if the stock goes up or down for this particular play. It's just a really neat scenario that presented itself that I chose to jump in on. And it's actually the first time I've done this type of plays, selling an in-the-money covered call after buying the shares at the same time. So a buy right strategy. I told you I was going to give you an update on my Palantir wheel. If you haven't seen this sheet before, I love to stay in this area of the wheel. Sell put, make money, sell put, make money. This wheel, it did that once or twice, and then I shot down here and stuck down here for a little bit, and now I'm back up here. And I'm going to show you those trades right now. So this started back in March 10th. I sold a put at the 21 strike, ended up closing it, made some money, opened up the next iteration. I mean, this is 10 contracts that I'm doing at a time here. I sold the 23.50 strike, and this time I got it signed. So what do you do on the wheel for that part? You go and you sell your covered calls. So here, the following Monday, I think this is, I sold the 23.50 call. Now, if I'm trying to get out of the position aggressively, what I would do would be take the last strike price, or my assignment strike price, subtract the last iteration of premium, and that'd be where I would want to sell my next strike price at if I was trying to get out of the position. So if I was trying to get out of this quickly, I might have dropped this down at the 23 strike. But with Palantir, I was pretty bullish at the time, and so I just chose to stick to that cost basis. So 23.50, collected a little $57 credit here, and that one expired out of the money. The next iteration, Palantir was up to $23. Again, I didn't really care about trying to make capital gains on the stock, so I stuck with my strike price where I got it signed, $23.50. I was able to collect a nice credit of $1.63. And Palantir went down, I think, to like 20. Ended up closing it here because there was a huge percent return pretty quickly. And I thought Palantir might jump back up. I could sell another cover call. I'm trying to time the market a little bit. Had I just left that on, they would have been better in hindsight, but it is what it is. So after I closed that, about a week later, I sold the next covered call, and Palantir was actually down to 18.83. The 23.50 strike, I would have only got like 42 cents. So by going up 50 cents, let me rephrase that. The 23.50 strike, I would have only got like 47 cents. And by going up a strike further, I only gave up 3 cents. So I chose to go that, because I'd rather collect that money from 23.50 to 24 than collect that 3 cents in premium. So that's why the strike price here is actually a little higher than my assignment price, even though the premium looks pretty low. And in the end, this one did get executed, so I had to give up my 1,000 shares at 24, which is nice because I bought those at 23.50. So the total profit between all these trades on this wheel is about $3,300, and the most it took in cash was $23,500 to secure this position. And that's when I got assigned at 23.50, and that would be a 14% return over the course of approximately 3 months. I think that comes out to 4.7% return a month, and that's pretty good. Since I track what the stock price is on the day that I sell the contract, I could tell you what happens if I would have bought the stock on the first trade and sold it on the last trade. And in this case, I would have bought the stock at $25.10. I would have sold at $25.37. I would have only made $207 if I bought the stock on that first day and sold it today. And if you do the math on that, that's only a 1% return. I think this is a perfect example that shows you just how awesome the wheel is. You're profiting off all that volatility. So it's just great. I mean, the proof is right here. I don't know what else to say about it. You already saw I sold five more put contracts on Palantir. Next week I'll probably sell 5 more and reestablish this 10 contract wheel that I'm gonna have running again. With all that said, that kind of wraps up this video. Tomorrow I'm gonna be premiering. I mean, I don't know what to even point out at this point. Got a couple of cover calls going on. You can see those when they're positioned next to each other. Still have some rocket leaps in play that if it moons, that'd be great. If not, whatever. I have a pretty good cost basis on that leap. Here's the the Zoom credit spread at the bottom. I am not a financial advisor. Any information included in this video is for informational and entertainment purposes only. It is not intended to be investment advice. Please seek a licensed professional for investment, tax, or legal advice.